Well, hello there, everyone. Hopefully, this finds you doing well. It is Wednesday, April the 27th, year 2022. And just FYI, shout out to Beth and her husband. Haven't met the husband yet, but I met Beth this morning. If you can't tell, because I'm squinting my eyes a little bit, but my eyes are dilated still because I had an eye exam this morning. And you might see me in a different pair of glasses sometime next week or two or three. I might get a new pair of glasses. These prescriptions are old. But anyway, I digress. And remember, I am not a financial advisor. I'm not a CPA. I'm not an attorney. What I am, I say this occasionally, what I am is still a very small contractor for the Motley Fool. Okay, the Motley Fool, fool.com. All right, because today I'm going to talk a little bit about stock investing, et cetera, et cetera, et cetera. Because most of society, we've talked about this before on my channel, most Americans live paycheck to paycheck. Most Americans invest very little unless they're investing in their 401k at their work. That's usually the most investing 95% of Americans do, is just their 401k. And they really don't know what they're doing. It's just their 401k. They pick a fund. All right. I'm on record many times, and I'll rehash this a little bit if there's any new viewers, such as Beth or her husband. I started investing in mutual funds in 1990. I found the Motley Fool in 1999. I sold all of my funds then and bought individual stocks and promptly had the dot-com crash in the year 2000, 2001. Plus 9/11 occurred right then and the whole market crashed, okay? I've been investing in stocks from then until even now, okay? But with that being said, as you all know, I bought my first rental property in January of 2017. And I quickly learned after I had several different rentals that to me, from my perspective, rental properties are a much greater way to create wealth than stock investing. And in a nutshell, here's why. Stock investing, you put your money in. Your money has to grow. There's something called the 4% rule safely, and it's lower than that from more recent studies say it's like 3.6, 3.7%. But I always round it up for easy math. 4% is a safe withdrawal. So if you plan to retire and live off your stocks, if you have $1 million portfolio and you can withdraw 4%, that's $40,000. And in theory, you should be able to live, hopefully, the rest of your life on 4% adjusted annually for inflation. Okay? But markets go up, markets go down. Markets are volatile. Okay? So if your balance declines from $1 million down to 800,000, now you're taking 4%. That's less money, right? Because that's what the markets do. They will cut your portfolio in half sometimes. All right, even if you have invested in the best companies out there, because the market does that. All right, but as I've said many times, I prefer real estate over stock investing now because real estate, you get positive cash flow. It just keeps coming in. Doesn't matter what the market's doing, you keep getting, as long as you get your rent, you get positive cash flow. With stock investing, you have to sell normally to get your money. But I'm going to reference a letter that I received here from the Motley Fool because I'm a small-time contractor, but I'm a member of the Fool. And this letter came in, it was a couple months ago, I think. Tom Gardner wrote it. Tom Gardner and David Gardner, they're brothers. They founded it. I've met both brothers. Great guys. If you get nothing else out of this video and you want to invest in individual stocks, I strongly encourage you, check out the Motley Fool. Consider, I'm not a salesman for them. I don't get any commission for this. Consider investing in their flagship service, Stock Advisor. You can find coupons online for like $99. Normal price is $199. Get it for half. If money's tight, get it for half price. Google it. Google a coupon, Stock Advisor, Motley Fool. You'll find something, okay? But and I've said this before, I subscribed to Stock Advisor in the year 2005. From 2005 to 2018, I had an annualized return that was covering, 13 years, of 18% a year. Okay, 2019, 2020, I returned an average of 100% both those years because I modified how I was investing. But currently, I am 99.9% out of the stock market. I do think, if you watch Michael Zuber's channel, he brings up the housing market being, and inflation and the economy being, he compares it to the 1970s, okay? If you look at the stock market, the market as a whole, there is a period like 15 years there, I think from like 1966 to 1979 or whatever it was, so sometime in there, where the market just basically flatlined, okay? Now, individual stocks in there might have done well. Okay, I wasn't investing back then. I'm not that old to be investing back then. But be prepared. My perspective, I'm not an expert on this, but I think we may be headed towards something similar. So if you're 40 years old and you want to retire when you're 50 and all your money's in the stock market, what are you going to do if the market flatlines for the next 10, 15 years? Okay, if it doesn't grow, if growth stops. Because we have been on a bull run since 2009. Up until just a few months ago, basically, and we've had some great returns. You should have been a stock investor then, not necessarily now, in my humble opinion. All right, but I got a letter here from Tom Gardner. I'm going to read it just a bit. I'm dilated, so it's hard for me to focus. But here, pay attention here if you're investing in any market at all, index funds or stocks. Stock markets go through sharp downturns. On average, history shows that markets tend to fall 10% once a year, 20% every 4 years, 30% once a decade, and 40% or more once every few decades. These are important numbers to remember forever. Markets are volatile, and the time to sell is not after markets have fallen. The markets have been falling, haven't they? If you have a stock portfolio, it's been knocked down. I have said it going back months ago if you've watched my channel. I think markets could do this. I recommend going into real estate. Look in the mirror. Did you follow my advice or not? I'm not telling you what to do. It's your choice. Okay? Obviously, I'll continue on here. Obviously, investing is more challenging when markets head lower. And where was I at? And our investments fall farther still. Even in mild downturns, it's commonplace for the stocks of great growth companies to get cut in half. It never feels good. For nearly 30 years now, we've been riding this rise and fall of markets. We've had our share of investment losers. We've endured years along the way where our performance lags. Through it all, our long-term business-focused investment approach has served us well. We've beaten the market soundly and made fortunes, and I expect the same to repeat in the future. All right. So he goes on. It's a 2-page letter. He talks about various companies. I can tell you some of this. The Motley Fool doesn't take a company-wide position on any stock. That means it's the Motley Fool. You may have one person recommending this one, and the other person is like giving the bear side of it. They don't recommend it at all. Okay, but rest assured, we have high conviction about the long-term potential of great companies. Long-term potential of great companies like Airbnb, Etsy, Shopify, The Trade Desk, CrowdStrike, Mercado Libre, and others. Their stocks may be down to the tune of 30%, 50%, or more. We've seen it before. We like their 5 to 10 year prospects. All right, over the last 3 decades, we've endured more pullbacks than we can count. I've invested over the last 3 decades. I know how they pull back. Again, I will go on record with saying I think we may, if we replicate the 70s, we may be in a stretch where if you're index fund investing, if you're in the S&P 500, you're just index fund investing, the market may flatline. If you invest in great companies, though, that are growing, you can rise above the market. If you're just investing in index funds, good luck. Okay, good luck. I encourage you to selectively use the Fool to pick growth stocks, but it's up to you. Because more so, I recommend take that money and put it into real estate. I'm not telling you what to do. Mazske doesn't tell anyone what to do. That's just what I would do and what I have done. Okay? Also, just skip it down here. He says, finally, as you consider the stocks you want to hold in your portfolio indefinitely, scour the markets for leaders with true intentions and long-term ambition. Long-term ambition. And he references 5 people. I may get their names wrong. These are the founders of the companies, I think. Jensen Huang of NVIDIA. NVIDIA makes chips. Jay Chandry of Zscaler. I've invested in both of those companies in the past. Willie Walker, Walker & Dunlap. I've met him. I attended Full Fest 2 different years. He was at Full Fest, I think, both years. Jaishi Alul of Arista Networks. I had all these stocks before. and Brian, except for this one, Brian Chesky at Airbnb. I never had that. These are fine examples of leaders following in the footsteps of giants like Berkshire Hathaway, Warren Buffett, and the late Herb Kelleher of Southwest Airlines. All right, so the Motley Fool. They go on to say they're reinvesting to serve you better. We want to become your 24/7 lifetime home for investing, business, and finance. Our Motley Fool live and backstage pass video live streams continue to expand, along with our daily Motley Fool Money podcast. We've rebuilt and upgraded my scorecard and added our allocator tool. We're simplifying our product portfolio, and a year from now, you will love our marketing. I promise. 2022 will end up being the most innovative in our history. I agree with that. Of course, I don't know what the future will hold. As we strive to better serve and partner with members like you, we welcome all of your requests. And he goes on to say, David and I will review every request that comes in. Okay? If you want to invest, if you have a stock portfolio, if you're investing in your 401k, your index funds, if you don't want to flatline it for the next 10 to 15 years, just in my humble opinion, I encourage you, if you don't want to get into real estate, I strongly encourage you to check out the Motley Fool. I'm not going to tell you where to spend your money, but their flagship service, Stock Advisor, it's cheap. If you pay full price, unless they've raised it, it's $199 a year. Find a coupon for $99 a year. They love growth companies, all right? All growth companies, when the market crashes, fall usually more than the market. But when they come back much greater than the market. Hence, from 2005 to 2018, I had an 18% annualized return. 2019, 2020, I had about a 100% return both years, okay? So if you're sticking with, Millennial Mike, if you're sticking with index fund investing, buyer beware. It may flatline for a bit. It may, or get 2% or 3%. It may not keep up with inflation, okay? If you're going to put money into the stock market, as Michael Zuber says, take 15 minutes a day to check out the Motley Fool. That's all it takes. It's not hard. It's not complicated. I'm not telling you to analyze companies. Don't search the market for the great leaders. Let the fool search the market for the great leaders. Let them do the heavy lifting, and all you got to do is sit back, read, or nowadays they're putting everything in videos too. Watch their videos on their site, read the message boards. You might find me on the message boards, and so on and so on and so on. Okay? So if you want to invest in the stock market, don't listen to your barber for the next hot tip. Don't listen to Mazske for a hot tip, because I won't give them to you. Don't listen to the guy down the street for a hot tip. Listen to, in quotes, the experts. I've been to Motley Fool headquarters. I have been to Fool Fest 2 different years. I've met David and Tom Gardner. I've met other Motley Fool folks. I've yet to contact them, but I'm going to get one of them to appear on my channel at some point. I'm friends with Jim Mueller. He's the Motley Fool tortoise. Him and I used to have lunch together a couple times. David Kretzman, he found the Fool when he was like 12 years old. Now he's mid-20s or 30-ish. And he works full-time for the Fool. David or Jim may appear on my channel. I know them. I've never asked them, but they may appear on my channel one day. So if I ask them. Because I am more into real estate investing now. Let me just re-emphasize that. I personally prefer real estate investing over stock investing. Hands down. Hands down. I am living off my real estate investments while I'm here. Real estate investments are paying my mortgage. Real estate investments are helping me to be lean, financially independent. If I had stuck 100% with stocks, I'd still be living in Virginia. Or if I was down here, I'd be working full-time somewhere. I don't work a job. The missus doesn't work a job. She goes to school. She's at school right now. And I might start going to school too. I have a bachelor's degree. I was in a master's program. I like school. I may just take a class for fun. Just for fun. So we'll see. Basket weaving, psychology. I love psychology classes. I love business classes. Maybe I'll teach a real estate class. Who knows? All right, and that's me. Oh, meanwhile, real quick here, I had some landscaping done this morning. I can't go. It's hard for me to go out in the sunshine right now. I got sunglasses, but maybe tomorrow or the next day I'll give a little walkthrough of what my landscapers did. We got a lot of shell down on one side of the house now. So, all right, y'all take care. Hopefully you follow my advice, but it's up to you. It's your choice. I'm not telling you what to do. All right. So anyway, have a great day. Mazske is signing out.